Professional Investor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. Holy crazy day, Batman. Can't believe it. And this is the weird way trading goes. Sometimes you'll go like days without doing anything, and then all of a sudden just, oh man, 20 different things all explode all over the place. So holy moly, what a busy morning this morning. This was crazy. And it, like, of course, we had this big inflation report that we were expecting to come hit the market here today. And wow, holy volatility. It's quite remarkable. I mean, if anything, probably the best way, a picture says 1,000 words, as they say. I mean, there was our market state. I mean, this is just up and down like a you-know-what. Probably going to be difficult to cover everything that I want to talk about today in this sort of summary video. I think probably a good portion of the conversation today should probably be had in the after party, all the different trades and stuff that I put on. And, I actually didn't take anything off, just put a bunch of stuff on. But very, very active day today, I have to say. And Chris and I started right out of the gate first thing this morning. I want to get into the habit, of course. I think I've shown you repeatedly that had some requests. In fact, actually, I had another person ask whether we could do a TRI meetup this fall or summer or whatever. And what I replied to them was I had a bunch of requests to actually run sort of a boot camp of how to set yourself up to day trade. What are the sort of things that you really ought to have in place? And of course, you can see daily checklists. I've been filling this out over the past couple months diligently, just trying to be like a demonstrator of best practices for you people. So you see this, and this is basically what I would teach. You also see, look at all the different trading plans that I have running here. I found it kind of amusing. Somebody said, provide me with your past 5 years audited statements by the big four accounting firms, right? Or else I don't believe that you can trade. You blah, 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 whatever. And as you can see, I mean, I have trading plans for Bitcoin. Do you think the big four accounting firms, little old lady, I was active in the little old lady. I went and bought some Ruin here. I bought a token at a 78.6 this morning. And I did a Bitcoin swing trade here today. And of course we have the futures markets all running. See here. So there's no way I can possibly do all of these trading plans all in one. And I haven't heard yet of these big four accounting firms actually doing like audited statements for crypto yet. So I don't know how the hell I would answer that kind of question. But the point of the matter here is you guys see day in, day out, I basically just am an open book. I tell you everything that I'm doing in the market, and I don't care whether you buy or sell anything that I buy or sell. If you want to participate with me, great, you're more than welcome, but I'm not shilling you. Of course, you all know the pitch. People's opinions, I think, are worthless. The only thing that's actually of any value is setups, and figure out what setups work for you, and then just get in there and own the market, right? Run your trading plan. So point is, I got a whole bunch of trading plans, and every once in a while you have one of these days where, gee whiz, I mean, I'm spending half of my day just journaling and logging and posting on the site. I did a couple posts here today in my journal. If you happen to be on the website, you should by default actually get my trading plan as the default sort of setting for the journal. Not quite sure exactly how that goes. It might not be the default, but anyway, it doesn't look like that updated either. But if I go to Trade Journal, maybe that updates at the end of the day. You can see I was busy journaling away here today this morning. So I did, for instance, I did buy a position for the Little Old Lady Canasta Club plan, and actually, Little Old Lady Canasta Club band. She's putting them on. In fact, actually, I've got to add another one, number 26 now. This was Rune, so you can see I still got more stuff to do. And actually, I really like this trade because I'm a big fan of 78.6 fib. You know, Brian's talks to you about his favorite fib and all that kind of fun stuff. And this was a really cool trade, right? Dipped right down in against these lows right at 78.6. I actually missed the trade the first go round. So a little pissed off at myself. I wouldn't be surprised if we actually have to work our way a little bit lower, but I got some on the books at my magic 78.6 fib. So I'm feeling pretty good. I don't know what the hell's going to happen here. I mean, it's good to see we're up on the trade a little bit now, but I'm not thinking about taking profits at any point, anytime in the near future. If anything, I put on half of the position, and that's what I like to do at these fibs is just get a core holding on. And then when a new W does come in on a break of trend lines and stuff, I can always add to the trade. But you can see crypto is actually enjoying a half decent market, but at the same time too, I tell you guys that I trade setups, and I've been barking away here for a while that actually I have a valid, like we call it a three-step setup. I've got Feigenbaum levels, and I think I've shown you on public videos that this is a megaphone top, which is typically a pretty dangerous market setup here, this megaphone topping here. And we got this M that did confirm. So we got trade location, and then RSI bearish divergences and multiple breakdowns here. Got lots of sort of heavy action, and then we got a big fat M that came in. So I wanted to get short off of this, but at the same time too, I have to basically take this amount of risk on this trade. I will risk to a new highs on this particular trade. And as you can see from this metric, I've got all the orders all working and stuff right now at 2.618, 50% level. That's where I'm going to try and take half of the position off. And then, I might alter that to a half of whatever this is. And then ultimately see if I can just ride this position for a while and see where it takes us down below. But it just was put on right now, and I do see that actually I'm underwater a little bit. And this position, I wouldn't be surprised it is underwater for a little while. This is really just ultimately a question of what does risk want to do here. Actually, I love using this tool. This is the Bitcoin futures minus sort of this is an OK coin cash index, but just a cash index versus the futures markets. And actually, when this M's out, interesting, it's flipping back and forth. But when this M's out, actually, that's pretty bullish for crypto. And you can see crypto's it's catching a bit of a bid here. So it looks relatively fine. But I'll tell you, man, this market is up and down and up and down and up and down. So why? Maybe that's where we should start the conversation off with here today. As we've been sort of talking about a little while, and actually, Chris, can you remind this work? This is some of the work that TRI OGs do, right? They get to the point where, like, quite literally, Stephen could go and get a job at any hedge fund on Wall Street, no problem whatsoever. They would absolutely love him. So this is where, as a student of mine, this is the point at which I want to get you to. So anyway, Stephen shared this with the community this morning. I thought I'd just sort of walk through it in the Afterparty show. So Chris, if you could remind me to do that, I'd appreciate it. Now, where do I want to start this conversation? Once upon a time in a land far, far away, it is interesting how the crypto breadth just won't roll over here. So we might find, I do find it interesting that this is still pointing bullishly. So we still have the algo long position on, go figure. Crypto universe is still positioned uppy, so go figure. Again, like I told you, I'm actually in there buying some cryptocurrencies this morning. And in a weird sort of way, I gotta say that, I did put tweets out that, if we're really lucky, what we might find is that, this kind of image is that Brian's birthday, because I've warned everybody that around Brian's birthday, sometimes the market can just go absolutely haywire. And we might just find that really what's happened here is the dump into Brian's birthday has afforded us an incredible buying opportunity. I don't know. We'll see. I did notice when I loaded up like 4-hour charts this morning, we probably could see this here. We actually had some half decent looking little sort of bottoms coming in down here. Notice that, eh? Nice W's. And there's a bunch of names that look like this. In fact, I think Chris said that he even strapped on a long on sushi. Didn't you say you stepped in on that? I don't know.
That is correct. Yes.
Although I was listening to this video the other day, though, I don't think you actually are on the audio feed for the YouTube video, are you?
Sometimes I am, sometimes I'm not. Depends on if I'm unmuting OBS right now. I've unmuted OBS. Hello, everyone, and good morning. So they
There
can
you
hear me.
go. Anyway, you can all see the W here. So anybody that is wondering, like, why would somebody step in on the long side on this? I think the chart makes sense. Interesting. Look at that little guy go. So, I mean, I don't know. I'm just randomly clicking on names here this morning, but we might find that Brian's birthday dump, and oh, by the way, it's also my show director's birthday as well. Isn't that it's interesting? I've never met anybody in my life that was born on my birthday day. But you can see crypto's actually catching a bit of a bid here. So maybe we just got handed a nice gift there the other day. Prices backed up. And like I said, when I see markets back up into levels that I absolutely love, I have to step in and buy. So I like that ruin that I showed you there earlier. Sjord's all rah bullish of it. And I would like to get long all of his names, but I only want to get long off of the levels that I like. So I was handed a really nice gift there this morning. So we'll see how it goes. I mean, maybe in a few hours we look back and go, oh, that's not a gift. That's a nightmare. Who knows? Anyway, live by the sword, die by the sword. It's a trader's life, right? So let's try and get back to what I was supposed to be talking about. What's going on here? Why is all this happening? It might be interesting to see whether the stock market can turn back up here. I did notice that I think this is one of these battles between sort of like old economy and new economy. And where the heck do I have all that? I hope I didn't put all that stuff away, did I? Oh, well, I guess we can go here. Yeah, let's start off with here. Okay, so first things first, what are the talking heads talking about here today? As I had said earlier, inflation data came out today. A bit of a mixed bag. And we have the inflation rate here. The headline, of course, is going to say inflation rate's fallen below 5%, 4.9%. So the trend, I guess, is good. We are seeing lower highs and lower lows. That's always a good sign. But we've talked about this at length. The U.S. Federal Reserve Board, and basically the banking community, whoever the hell they are, they would ideally like to have this inflation number around 2%. Keep in mind, for the better part of a decade, we were supposed to be going through deflation, and yet they were able to sort of keep inflation at zero. So you might argue that really what we've seen happen here, since we were supposed to go through deflation, we never really did get the deflation. As soon as we went right back into an inflationary cycle, because they were inflating the economy while we were going through a deflationary cycle. As soon as we get back into the inflationary cycle, boom, inflation just goes crazy. The policies of printing money endlessly, it doesn't surprise me that we're living in this horrible inflation world. And, you can also call it Klaus's Great Reset and all that. Sjord was telling us in the after party yesterday through his presentation that he's a big fan of Formula One. What was the price tag of that? It was like a crappy sort of like Philly, cheesesteak kind of sandwich. I mean, certainly not gourmet. Kind of like quasi state fair kind of food. And the prices that they were paying, I think he said there was something like 400 US dollars for a Philly cheesesteak sandwich in Miami at the Formula One race this past weekend. Was that number right, Chris? Did I get that right? Was it 400? And it was just absolutely staggering what these cocksucking sons of bitches are doing to us. It's absolutely staggering. So get used to it, folks. Klaus is having his way with us, the bastard. Anyway, so the inflation is still here. It hasn't gone anywhere. The question ultimately is, are they going to so Matador says, come on, wasn't that bad? That was the price for 4 of them. Okay, so I didn't remember that. If anything, I was just sticker shocked by $400. So it was $100 a sandwich. Oh, well, that's better. Hey, yeah, we should all take a sigh of relief. It's just insane. There's Matador saying it was only $100 per deli sandwich. I mean, still $100 a C note for a sandwich. I mean, is this Weimar Republic? I think it is. I think that the only way out of this is Weimar Republic, which is a shame because that means this is going to get a lot worse before it gets better. I mean, I'll try and scroll through. I don't know whether I can find it or not, but on a regular basis through the week, of course, we sort of all live on social media like everybody else. We're passing around interviews and videos and stuff that we like, and I have to say, Sanjay shared and I'm not even quite sure what this is, but in our weekly newsletter, this would be something that if we had like sort of pieces to watch through the week. Sanjay passed this video around, an interview with Mr. Druckenmiller at not my old alma mater, but when I was living down in LA, I used to do a lot of stuff at USC. Anyway, he was at USC there. But Sanjay passed this around, and I would say do yourself a favor. In fact, I'll even put it on the free page. Maybe take some time to listen to what Mr. Druckenmiller said. Like I said, I mean, are we in Weimar Republic days? We could very easily be, folks. A wheelbarrow of money to buy a fucking loaf of bread. Buy your Bitcoins, I suppose. Be well hedged. I think he's said that he's long euros. He's long gold. He actually made fun of the fact that, as a anecdote of how absolutely stupid this money printing and quote unquote free money and just completely irresponsible monetary policy. He was making fun of Dogecoin. He's like, hell, even that dog money went to like billions of dollars market cap. I mean, it's just ridiculous. So interesting anecdote there. So do yourself a favor, listen to Stan. I think, if you don't want to listen to the Beamish, if anything, what the Beamish does is he'll sort of give you layups. Hey, listen to this person. We talk about Miss Booth. I think she does fantastic work. We talk about, Mr. Gannon. I think he does some pretty interesting work. Obviously, Stanley, I think very highly of him. So maybe just do yourself a favor if you're watching these. Wait for this sort of video drops, ideas for you to chew on, and take it from there. Anyway, So back to our conversation, the point of the matter here is inflation still running pretty hot. And I think probably more importantly, you notice, and this is something that the public probably doesn't understand too much, but interesting enough, the Fed will follow the core rate actually more closely than the headline number. And you ask, well, why is the core rate higher than the headline inflation number? And that's all about commodities. And actually, it's interesting to see here today, and sort of one of the sort of screwy things that I noticed in the market through today. The crude oil market actually was coming off, and look at gold and silver. Look at the way they're coming off here. So, in a weird sort of way, commodity prices themselves are actually sort of calming down to a certain degree. And I think that, like we've actually, I find it hilarious or depressing. I'm not quite sure which, but, I go to the local grocery store here in our substitute drama teacher world. And the price of a loaf of bread keeps going up. It went up like another 10% just a week or so ago. No reason whatsoever. And yet you look at the price of wheat and it's like, what the hell's going on here? Why are you raising the price of a loaf of bread? 10% too. I mean, 10% is 10%. What the hell? Commodity prices are falling here. Why are you raising prices? So, and it's just because some substitute drama teachers have completely destroyed the purchasing power of the currency. It doesn't really have much to do with the actual commodity, the actual wheat that it is you're buying and you're ingesting. Ironically enough, the loaf of bread, it doesn't change at all. It's just the value of the currency is collapsing. Thank you, substitute drama teachers. You have done us such a great favor. But remember, substitute drama teachers are puppets of Klaus. So he's just doing what he's told, and he thinks that he's doing the right thing, but he's just feeding the 1%'s interest. It's kind of sad, but anyway, that's our reality. So core rate still very, very strong and above the headline number. So we're still up in 5.5%. Remember, the Fed wants this down around 2%. And interestingly enough, month over month, we actually had an uptick in the core rate. Uh-oh, not this again. And as well, too, like they're kind of like little tells that the economy is still really strong. We had talk about like mortgage applications and the housing data and stuff. If you look at the headlines here, mortgage applications rebound sharply. Well, wait a minute. This is exactly what the Fed doesn't want to see. So, it drives you crazy. I don't think the Fed's done raising interest rates by a long shot. And interestingly enough, no pun intended, you can see that the stock market now doesn't not like what it's seeing here. And we're in a really interesting sort of switch here, because I think what's happening now, keep in mind, we're in the growth cycle. And if you want a really good history lesson, go look at what the NASDAQ did as soon as we got into sort of the early 1980s. I mean, it went absolutely crazy. And the percentage returns on NASDAQ from like 1982 to 2000 were just, they made the Dow look ridiculous. So we might be in one of these situations. Old economy suffering badly, new economy doing great, right? And if we come on over to sort of the heat maps, who's winning in this game? Remember, we had pointed out AMD the other day was the only green thing over here. Look at AMD, just keeps rocking it. And actually, Stanley was talking about one of his best investments he ever made was buying NVIDIA here recently in the past few years. So he's feeling pretty good. Amazon's catching a bit of a bid. It's interesting that Apple was moving forward. Remember, I told you we had a little short on there, but stop to break even level was hit, so we just walked away. And I also noticed too, I mean, first thing this morning, I can't even get into it because we're running out of time here, but very busy in the day trader room. This morning we had a crude oil. I try to take these opening range trades with Chris every day, And today's trade, it just worked out to a scratch trade. We were stopped at scratch. But if anything, very happy that following the process goals, solid. Yeah, it's a scratch day, big fucking deal, no big deal. But I did notice through the morning, and as you can see it, if you see a lot of notations here, it means, oh boy, Brian's been busy. In the futures markets, and actually there was a really interesting 4-hour level. So you can see Brian's BFF and the original market breakdown level. You can see the market rallied right into these levels, horizontal support and resistance. I actually did have a valid 4-hour trade location set up there this morning. And at that point, if I see that we're coming into a cluster of horizontal support and resistance and into fib levels that I'm interested in, we're pretty far away from moving averages. Then I start to drill down to the lower time frames. And I mean, this was a heartburn because this actually set up the prettiest little railroad track top. But I have to follow my plan. And my plan is I want to see a bear div in MACD. And I don't like it when MACD just goes straight up like this and straight back down. I would have liked to have seen a nice M. We did have a bear div in RSI, and Willie was stupid, but I didn't have the MACD div, so I couldn't pull the trigger on this, which isn't, it's just, I have to follow my plan. But it's fascinating to see that bang, right into 2 to 1s, 2.5 to 1s. Anyway, it's a trader's life. It's the way it goes. But, long and short of it there is I think there was a day trade there this morning that I just let slip through my fingers. We'll give, I publicly got to give shout outs to site members. There's one gentleman who is just coming on like gangbusters. His screen name is Skedfinger. There's a name for you. But man, I was so impressed with his day trading this morning. I think he's now on to the second or third level of sort of passing top step, my old prop firm sort of evaluation. So he's doing everything that he's supposed to be doing. Big shout out to you, Skidfinger. You're kicking it. And if anything, this is what I want to see is I want to see people at TRI actually become even better traders than me. I'll give you the framework. I'll show you how to behave, give you a whole bunch of different squiggly lines for you to chew on and consider. Then it's your job to get in there, build your plan, manage your emotions, and trade like a boss. So again, got to give big shout out to Mr. Skedfinger. I'm so impressed with the jobs that the TRIs are doing. Chris, I think, like I've said recently, he just, and I've been so damn lazy, I can't get off my fat ass to get all this up and running. But he's already now getting to the point where he's achieved a prop firm's initial sort of test level in what was that place? My Forex Funds. So it's great to see TRIers are doing fantastic. And I think we have just an incredible community here. Every single day, it's such a pleasure waking up and hanging out with these good people. So just, if anything, just try and remember that you're not just buying Brian Beamish. If you're coming into TRI, we have a whole team of instructors. All of them have been funded in their various different capacities, doing their own trading, following their trading plan. We have day trading rooms. We got a whole bunch of guys that are live trading there. We have a beautiful and active community. So, I mean, it's great, this TRI experience. And also, too, we're really, really big fans of this PMA for the win kind of idea. Hey, there's Mr. Skedfinger. I don't even know if that's what you want to be referred to. Anyway, there he is over on YouTube. And I got to tell you, man, this guy is a fucking boss. Anyway, so great to see him doing very well. And, if anything, I might have jinxed him. So, no, you suck, Ed. You suck. Keep working. Anyway. The headline today was all about the inflation, obviously. They had a pretty violent reaction from the market around that headline. Yeah, I know. Geez, I knew that this was going to happen. There was so much to talk about today. I probably only got about half of what I wanted to talk about out, but currencies zooming all over the place. I do find it interesting that the gold, on that report release was just rocking higher and then just puked out. If anything, I've told you before too that, the sell in May and walk away actually originates in the commodity industry. So be careful there. And if anything, if we're really lucky, what's happened here is we got a big dump, into those numbers. And technology is sort of firming up and feeling a little bit better. Old economy doesn't really look that happy here, but new economy, Bitcoin, crypto actually looks pretty positive. I did strap on this huge higher time frame short trade in the Bitcoin. I will be risking the new highs, so it's not really like I'm going to be doing anything on this, and you can see I'm already off like 20-30 bucks there. At the same time too, I've actually stepped in on the buy side on some of these alts that, of course, that I'm spending 2023 just accumulating. So extreme volatility in the market, all around that inflation number. If anything, if we can get this S&P 500, I would imagine the tech sector is probably going to start trying to turn back up. Oh yeah, look at that. So it is trying to turn back up here. So if we can get this tech sector to drag the old economy names back up, and actually get the S&P 500. Where are we here? I've screwed this up. Sorry. Crypto. If we can get this S&P 500 to turn back up here, we might actually see that the whole market actually goes right back into rally mode. I don't know. We'll see what happens. Only time will tell. All right. I didn't really see anything quote unquote news worthy that really jumped out at me. Like I said, the most pressing thing today was all about that inflation number. And I think it's actually moving the markets here. It was a pretty big event. Yeah. If you want to watch something today, watch to see whether this NASDAQ actually rolls over here. If the NASDAQ goes and M's out through the day here and it loses its inertia, then that probably means crypto is also going to lose its inertia. You can see the S&Ps, the Dow, the old economy, they're not happy at all. And also actually be interesting to watch Russell 2000, small cap market. That should be an interesting tell too. It really is not performing. It just seems to me it's like the big. I even heard Stanley talk about Nifty 50s. So if you're not familiar with that term, maybe familiarize yourself with that. He's getting the feeling that we're heading back into one of these Nifty 50 type environments. So, all right. Well, there's a whole bunch to say, and I don't even know whether I said it all. So. PMA for the win. I'll probably take a deep breath. And then we got a whole bunch of names to review from yesterday's SOF club meeting last night. We also have a few crypto names in the DB request that I was working through yesterday just to do some basic analysis. And of course, if you have any questions here in the short term, feel free to ask through the after party as well. Okay, I think we'll leave it at that. PMA for the win. I don't know whether that was any value to or not. If anything, the big value thing that you should take out of today's broadcast is go listen to what Stanley has to say. Tell you, he's not painting a pretty picture of what he sees happening in this world. It sort of reiterates this whole idea that 23 is not going to be a straight line up. It's going to be up, down, up, down, up, down. And if anything, sell in May and walk away. I'm still leery about whether we really are going to rally here or not. So anyway, slow and steady wins the race. Of course, tomorrow we've got a really interesting curveball. We'll see whether that plays out based on historical precedences, but you never know. Maybe this year it will be different. Fingers crossed for everybody. All right. Have yourselves a great day. All the best. Again, I sure hope I gave you some value here today. Just trying my best day in, day out. Big news today was about the inflation. It's still here. And old economy, they're not happy with what they saw. New economy, nifty 50s, they seem to be catching a bid. And of course, if you are crypto oriented, you are in that sweet spot of the economy. And hey, if we're really lucky, some big fat W's will start coming in here. Maybe we can get bullish again. All right. I think I'll leave the rant at that. PMA for the win. All the best. Have yourselves a great day. And the only thing left for Brian to say is bye for now.